tryna take it down, placeful. You just scoring mines, best the bar.
All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, I want to talk about how to find support and resistance, but mainly how to use it and view it. So I'm going to explain what support and resistance is, and then really just talk about how I use it, because I'm not a big technical trader, so this is a little bit different coming from me, but I'm sure a lot of you guys have seen me be trading live, and you guys have seen me use certain levels and look at it. I take it into consideration, but it is not really something that I rely on. However, when it does come to technicals, one of the only main factors I do use is just basic support and resistance, which I want to show you guys, as well as volume and average volume. So this has to do with reading the charts. A lot of people are very interested in that and going about this, and I do view it as looking at the chart, but mainly though it is price action in my opinion. So I want to even just talk about how to interpret this, go over this, show you guys a few examples, and hopefully give you guys a little bit more insight, especially coming into this earnings season, how you could use it and really see what these prices are telling you all. So let us get right into it. Make sure you guys drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there live. So again, this is what I was saying. You guys have seen me use this live. If you don't know, you can see us trade live every single day. It's free 99. All we ask is that you are positive and respectful. But getting right into this, though, the first thing I want to start out with support and resistance, and what you guys need to understand is why is there support and resistance. Again, a lot of people want to look into support and resistance, how it works, even technicals, but the question is saying now, why does this exist? Why is it? And now here's the general theory that support and resistance, support is a level that a stock gets to, and there's this quote-unquote support. So you could see that on the chart, but that is also even highlighting to how the stock is viewed by investors. But essentially, when a stock hits support, it means it's not going to go below that price, or it'll have trouble or difficulty dropping below there, and then usually that's where things bounce from. Then the next key is resistance. It is the opposite of support. It's that price on the way up where the stock can't get past a certain point. And now it doesn't necessarily mean the stock has to be hitting highs to break resistance, but that's even a strategy, chasing and going after stocks when they do break resistance, and that is even something I have done before and I've taken full advantage of. But you could also even get resistance on the way up, even coming down from a downturn. An example of that could be here, even on Snapchat. You guys see it bottomed out there, but even on its way up, it had this resistance level here at about like $18. And then even recently, it's breaking out of that. So this, even Snapchat's a great chart to even be able to visualize, again, support and resistance. You could see here the stock IPO'd, it dropped, it hit this, again, that 1898 level. And you can see it now. This is a common phrase that people use if they're really looking at support and resistance, is that pretty much former support becomes the new resistance, and even former resistance will become the new support. That is a common line here. And again, you could actually visually see it here, but see how many months it took for eventually Snapchat. It did drop below that support at $18. It quickly came up, but then pretty much once it broke that support of $18.30 or $19, it really started to fall through. It dropped, and then now it established another line of support. You could see 1157. That for a while, you could see just how the chart is bunched up in certain areas. This stock had support there. But again, on the way up, though, even on the way up many times as it came to 18, even though it was kind of uptrending, but still not at new highs, it was still facing that resistance, which was the former support. Now, again, you talk about this, it does sound very technical, right? Oh, former support, resistance, this and that. But now this is the question that I am asking, and that this will further your understanding with how to use support and resistance the best way. Again, the fact is you could find support and resistance all the time, and that's what I really want to differentiate, because how I look at it is interpreting now support and resistance from a investor perspective and asking this question: why is there support and resistance? Why is it that this stock won't drop below a level, or why is it that the stock can't get above it? And one of the answers is it is how the stock is viewed by investors. So there's many, many reasons. One could be, as a stock hits a certain price, depending on earning, the way I view it is what investors believe it's worth. And essentially now, with the fact that stocks are going to move up and down every single day, the question is, where is it going to end up? And this is going to be in one of the rules of thumb. You'll see, because you could use this support and resistance. I'm looking at a daily chart. I'm looking over years. You could go to a 14-day chart, and you could even see support on the last 2 weeks. Again, you're seeing kind of a clear support right there. Some people would say this is support simply because you could see how the stock hasn't dropped below there. It's held right there. Again, it's held a clear level. But the way I'm viewing this is now purchases and transactions over time, and I'm asking what is really the equilibrium price. So this may be support, but if I wanted to cut this chart in half, to me, just naturally, when I'm looking at this visually, it looks like support would probably be around here or a little bit lower, kind of the equilibrium. And that's one thing now, when you do go about finding support and resistance, think equilibrium price, but more so think median price. This is like statistics, even real estate. And this is the whole example that I want you guys to understand when it comes to support and resistance, is understand how purchases flow. This is the stock market. Every single day, people are coming in and out. There's the high frequency traders, all of that. There's a lot of purchases and sells. So one purchase, one sell, or the performance in one day or the last week, it's not necessarily going to represent the true actual price. So just like I'm saying, in statistics or real estate, in statistics, they look at a set of samples, and if there's a sample that pretty much falls outside of the range, it's an outlier. So if it's too really high or really low, that skews the average. So that's why when you look at median, it's actually more accurate when it comes down to saying what is the value, because averages or the mean or the average price, that could be skewed with outliers. And when I'm saying, what is an outlier in this case, is that some days a stock will go up, it'll even go up $10 in one week, then it'll drop $15 in the next week, it's overall down $5, then it might move up another $20, but every single day it's moving, there's going to be pretty much a median price. So just because it might be up for a little bit or down for a little bit, that doesn't mean where it usually ends up. And that's what I'm thinking, equilibrium pricing. And now we could talk of equilibrium pricing, economics, and all that. We won't get too deep into that here, but think now you're trying to see what is, over a series of samples, what price is it that investors are willing to pay for a stock. That's how I'm looking at it, because investors are using this to pick up an asset, and they're actually trying to find, okay, what's a good value? It's the same thing with real estate now. Just because, and this is, maybe this will explain this example a little better, just because one house sells for $500,000 and every other house around has been selling for $400,000 doesn't necessarily mean now all those houses are worth $500,000. They use the median price, and then again, they're using the last transaction sold. So it's both the median, not the average. The median is the middle price over the series of transactions. So that's one thing to keep in mind now with support and resistance, is the time frame. So out of how many transactions, or how many trading days or the time frame you're looking at, what is the median price? And then now, what has been the buying activity? So again, it's both that duration as well as now even recent market purchases and sales to determine how the market is viewing it. So it's not just one day or one price level or even 1 week. You're looking at support and resistance over a longer scale. And that's one thing I'm going to talk about, and that's going to be one of the pretty much the rules of thumb here when it comes to support and resistance, is that the longer the support, the longer the duration that you're looking at to assess support on a price or even resistance, the more accurate. So if you compare, weekly levels versus yearly levels, like when we're looking here at this support on 14 days for NVIDIA, you could determine maybe support is 247 right here, or I'm looking at kind of more equilibrium price like 242, 245. You see, I'm looking at where the middle is out of the duration. That's where I'm kind of assessing my own support and resistance. But now that's on a 2-week scale. So that support resistance can easily be broken with not much second thought. But now if you go and pull it out from 14 days to 1 year, you're going to get a whole different equilibrium price, because again, this is a larger sample size with more days at more different prices. This is why I'm saying I'm not really a big technical trader, but this is a visual representation of the price that investors have been willing to purchase again, and you could see all those different levels of support and resistance. But essentially, the longer the time frame, the more accurate. So in this case, even then, you could see, looking at NVIDIA, a 1-year time scale, you're going to have pretty much stronger support levels. Again, that's another way to look at even more accurate. And so essentially, if you do see something break and go below a support level or above a resistance really, really easy, it is pretty much now what was the strength of that support, and that best way to assess that is over time. So that's why you could see here, at one point coming off and again, I'm using a 1-year time frame, we could extend this, but one day after this 163 level, this was resistance, it broke through there, it set a new point, and then you could say now this was the next resistance level, because again, there wasn't a higher point after that. If we did go back, there would have been a higher point, and that's funny, because now take a look here, this resistance after breaking out from that low here was actually a level of support. You see it hit here once, bounced up, and then finally when it did break through from that low, it had to break that 190 level. So that was kind of that next resistance. It failed to break it. It came down, then eventually it broke it. And then again, it came back pretty much in between this level. So again, this is what I'm saying. It's not always going to be exactly the same. And this is where you have to see and ask yourself why this is how investors are viewing it. It's saying, why won't it go above this price? Why wouldn't it go below? Because there is still a value in something that investors are buying. So in a way, you could even view it as sentiment. But you could see here, this was a strong resistance point. There's something clearly, adding to the fact that it can't get above this level. And why can't it get above there? People are not willing to pay for it. So again, keep that house example in mind. Just because it sells above there for a little bit, one house may sell at a different price. If it goes below, it doesn't necessarily mean that it's, going to be worth this. So it dropped below there. And again, you could kind of see. So I'm doing that so you could kind of get more experience with looking at this. And how I like to do it is I go straight to equilibrium. I pretty much try to cut the chart in half and see where now investors have bundled up. And the reason why is I'm saying that's where you're getting the most support. That's where you're getting the most purchases. And it's not just one day. Is now when you see investors bunching up like here, this is telling you something. It's telling you something about the value. It's telling you, with millions of shares transacted, every single level of support and resistance, there's going to be blocks of investors who bought at that price. So think a rational person, a rational investor, they want to maximize pleasure, minimize pain. Their break evens are right here. So essentially, the further it gets from that support, the stronger it's going to be, or the more likely they're going to be to hold on to the stock when they're up. But that's why sometimes when it breaks, you got to realize they start losing, and then there's a next level of investors who bunched up around here. But you could even see here, you could say the support is at this like 124 right here. When I see this, all through these months, you had investors at different level. I would cut this right in the middle and just say the support was at 150, not necessarily 120, but those would give you two different levels. So again, I want you guys to just understand the mindset with here. Like I'm saying, equilibrium price, median price, all that. But another example could even be cars, take like used cars, a Honda Civic, for example. Just a few might sell at higher or lower prices. But now when I'm saying find out where investors are bunching it, where did most of the transactions occur at what price? That'll give you a stronger indicator of how the market feels about this price. So even the point of this video, I would say, is that a lot of people look directly for just tops and bottom to identify support and resistance. I'm saying kind of find where there's bunches and find the equilibrium price and think of it asking that question is why, and understanding that this is where investors, you have volume in a base of investors agreeing at a certain price that, over the few months, this is where they've all got in and exited for a reason. It's holding this price. And usually that's where now news, fundamentals, earnings comes into play. That's why sometimes the stocks won't move until, they'll get an equilibrium price of how investors feel about it. And investors feel that way till they get more updates. They find out more information about the company, and that changes now the future value. And that's what you get to see in price too. Don't forget, price is showing the ownership and value that you have right here, right now. But price goes up and down as people's future expectations change. So that's what I'm saying too. You get to see how the market is viewing future expectations and what's the difference between 6 months ago, 1 year ago, and today, most likely with a company, depending on what price, as more and more information comes out, those future projections change. So keep that in mind. And really, at the end of the day, just because something sells higher or lower for some amount of time, and just because it may set a high or a low, that doesn't necessarily mean it's support or resistance. And that doesn't necessarily mean that's the natural price that the market agrees with. So essentially, you may have for a period of time some cars, some houses, and now in this case, some stocks, they may sell at a higher price than really the market agrees with, because for half the time, for a few months, it'll be higher, a few months, it'll be lower. What's going to be that equilibrium middle price? That is what's really going to be your support. And you could kind of see that here. Imagine all these ups and downs during, the beginning of 2018. You cut this little block in the middle, pretty much your equilibrium price is right here. And coincidentally, you could draw that across. You see it act as support, and you even see it as a level when it did break. Things did change with the company. Or price changed drastically. But that's also the next thing too you got to be careful for. You could see many times it will test the support and resistance. It doesn't always have to break through, and it doesn't always mean there's a move. So that's why be careful with this sort of technical analysis. But moving forward, like I said, some of the rules of thumb to take into consideration, the longer the support, the more accurate or the more strength that support's going to have. The longer it's had that price level. That's why too, even a simple strategy is when stocks break like 5-year, 10-year, 15-year support, those are usually going to be big moves. That's why some stocks have breakouts and they could get really, really big and then even continue long trends. And like, seeing the video is a great example. Even Boeing now, over the last few years, you guys have seen, where it's been at and how it's moved. Every time there's been certain levels, pretty much people are waiting because the minute it breaks through this certain support. And that's why, even though I'm not viewing it technically, it'll be a big move. And why I would say that is simply because that means if eventually now collectively a lot of the investors, think of all the investors who've been purchased at this price or even higher, or even the ones who bought it lower and up a lot, the minute the market agrees to sell below a price with a large investor base, that means something has changed materially with the company, or people are fundamentally reassessing its value. So then they begin willing to sell off below that price. Like I'm saying, from a strategy sake, anytime something breaks a multi-year high or low, that's usually when it's going to be important. That's kind of what you saw here. For Boeing, like 2013, even to 2017, once it finally broke that multi-year high at 153, it really started to shoot up. Another example you could see kind of for the downside is GE. It really started to sell off here. At one point, it dropped 50% even from the low, and that's when it broke pretty much now a 10-year support level. It got pretty ugly, and now you could even see sometimes they hold up, but the longer it is, so again, if it's been a historical high or low, the more history, the longer it's been since it's reached that price, that again, the stronger of a support level or resistance. But now another thing to keep in mind, and this is now when you guys have seen me call certain levels, is understanding even the psychology. There's a little mix of it, especially with the SPY, because now again, sometimes I'm using both short-term support levels. When I see the SPY drop and get hung up at a price or something, it's usually off of the short-term 14-day, even 1 month support level. But one thing to always keep in mind is these numbers 25, 50, 75, 1. It's psychological support and resistance. So sometimes now even whole numbers have their own little resistance levels, or you'll often see another number I will throw in here is 0.30. So usually when it hits a high or a low and it breaks past it, it'll usually either go up like $19.30 and then come down, and that'll set the level, or even 30% move up or down when it does break out. It's something I've noticed that's pretty weird here, but at the same time, there's a lot of psychological levels, and when you get to certain prices like here, you will see them act as certain resistance points in their own little, time frame. But finally, to even wrap this up and to leave it on here, is that any support or resistance is not obligated. And again, the question is, ask yourself this. That's what I'm saying. As you do your interpretation, it's easy to spot support and resistance, but try to kind of create your own by observing the equilibrium price and asking this question: why is it acting like there? What's different about the company, the earnings, and everything, and understanding what is influencing market actors to support this level. That's the way you really interpret this. It's not just support and resistance because of the chart. These are support and resistance levels for where investors support the price or pretty much cap its worth. So keep that in mind, and that's what I'm saying now. Any support and resistance level, it's not obligated. This is based off market sentiment or attitudes, and those can change very quickly. That's why we do like to view it historically, and that's why the best accuracy, I look at the daily, yearly supports. I like to use 100-day, 1 year, and then 5, 10 years, those psychological numbers. And again, you could even apply the psychological numbers to any duration, but I do know that depending on the news or depending on how the market is interpreting it, sentiment and attitudes can change quickly, but there is a strong incentive. Again, that's why they call it a support level. There's a strong incentive for some stocks and the valuations to get supported at certain prices. So keep that in mind. But that is it, baby. Hopefully you guys enjoyed your weekend. Hopefully you learned something from this. Let me know if you have any questions or comments. I did describe this in a different manner, and I know some of you guys might know this stuff, but I think for some of you, it's just something to get refreshed on. And now even, viewing it as a beginner, what is support and resistance, but also in the advanced way now is understanding why, and now how we could factor this in now, even coming into earnings and see even price levels and now what's realistic. And the more you understand this and how stocks move, especially at these levels, it's how do investors view it, and then how can the underlying stock itself actually move like that. So I'm gonna leave it right there, baby. Let's go.